All right, welcome to this explainer. Today we are tackling a massive headache that is literally keeping IT directors and CFOs awake at night, securing cyber risk insurance. We're going to dive into some critical insights from Cyber Ambassador on this exact issue. Look, a few years ago, cyber insurance was a nice-to-have luxury. Today, it is absolute financial life support. But here's the catch. Just wanting a policy or even having the budget for one is no longer enough to actually get one.
So let me ask you a seemingly simple question. Is your business actually insurable? There's this really dangerous assumption floating around boardrooms right now that simply applying for insurance guarantees you'll get coverage. But the gap between filling out an application and actually surviving a multi-million-dollar breach, that gap is vast, and bridging it takes some serious structured preparation. To untangle all of this, we're going to follow a quick roadmap. First, we'll look at the new security regulators. Then, we'll explore the insurability gap, walk through a 7-step readiness roadmap, examine modern threat coverage, and finally, we'll calculate the actual ROI of readiness. Let's get right into it.
Starting off with Part 1, the new security regulators. The entire operational model of the cyber insurance industry has drastically shifted in just the last few years. Think about this for a second. Insurers have become the new security regulators. That is a massive paradigm shift. It used to be government bodies or industry standards dictating your security posture. Now, the underwriters hold all the keys. If you fail their baseline technical requirements, your application will either be denied outright, or they'll slap you with these crippling exclusions that make the policy completely worthless right when you need it most.
So what exactly do these new regulators actually demand? Well, insurers now require proven multi-factor authentication, EDR, or endpoint detection and response, and immutable backups. These are no longer just IT best practices you keep on a wish list for a rainy day. No, these are absolute non-negotiable mandates just to get a seat at the table with an insurer.
But hey, before you even apply, you really need to be aware of a hidden trap called silent cyber. This refers to those really dangerous gaps where cyber threats are entirely excluded from your existing general liability policies. If you or your board thinks standard business insurance is going to cover a digital disaster, you are looking at some massive financial exposure. You absolutely need a dedicated, specialized cyber policy to actually be protected.
Which brings us to Part 2, the insurability gap.
300%. That's a huge number, right? Well, that is how much more a business can end up paying for coverage simply because poor internal security makes them look like a high threat to underwriters. It is a massive, completely avoidable drain on your budget.
And here's another major pitfall to watch out for: inadequate indemnity limits. Just imagine holding a policy covering, say, 1 crore, but a major breach actually costs your organization 10 crores to fully remediate. That 9 crore shortfall, yeah, that comes straight out of your operating capital. Honestly, being underinsured is often just as dangerous as being totally uninsured.
But listen, here is the most critical warning of all: failed underwriting. If your IT team answers yes to having certain security controls on a questionnaire, when the implementation is actually missing or incomplete, you are setting a massive trap for yourselves. During a breach, insurers investigate. If you misrepresented your posture, they will legally refuse the payout. And a claim denial during an active incident, that's a fast track straight to insolvency.
All right, let's look at the solution in Part 3, the 7-step readiness roadmap. You really want to think of this roadmap as a consultative journey. It's essentially a crucial translation service between your messy, on-the-ground IT reality and strict underwriter requirements. Because to survive this, you literally need to speak both languages, digital forensics and insurance indemnity.
So, let's walk through the first phase of this journey. It all starts with a pre-underwriting audit. This is basically a mock assessment to find the exact blockers that would get you denied by an insurer. Next up, Step 2, you fast-track mandatory controls, things like that MFA and EDR we talked about. Step 3 is risk quantification. This is where you calculate your maximum foreseeable loss so you know you're buying the right amount of coverage. And finally, for this phase, proposal assistance ensures that your technical setup translates perfectly into those complex insurer questionnaires.
Moving on to the final 3 steps. Step 5 is policy scrutiny. You really have to dive into the fine print here to ensure things like ransomware are actually covered. No assumptions. Then, for Step 6, you sync that policy with your incident response plan so your team knows exactly who to call the second a breach happens. And finally, Step 7, claim support. When the worst does happen, you need forensically sound proof of loss reports to absolutely guarantee your payout goes through.
That takes us to Part 4,
specialized modern threat coverage.
Look, modern threats require very, very specific coverage. It's not one size fits all. For ransomware, your policy must cover both the extortion payment itself and the massive business interruption costs. For social engineering, you desperately need protection against voluntary transfer fraud, when an employee is tricked into willingly sending money to an attacker. And for those of you in India, regulatory fine indemnity is absolutely crucial for penalties coming from the Data Protection Board or the RBI. And finally, having accurate system downtime calculations is a must to ensure your limits actually cover your real-world losses.
And finally, Part 5, the ROI of readiness.
Doing all this prep work isn't just a compliance exercise. It actually delivers a massive return on investment. First off, by proving high security maturity, you can actually negotiate preferred rates, which significantly lowers your premium costs. Second, you unlock a much wider coverage scope because you can demand the removal of restrictive exclusions. But really, the ultimate ROI here is claims certainty. With all your forensic documentation ready to go, you provide the unshakable proof insurers need to pay out promptly and fully.
At the end of the day, insurance is your financial firewall against a devastating cyber attack. But as we've seen today, just buying a policy doesn't mean that firewall is actually going to hold. By pre-auditing your controls and truly quantifying your risk, you build a resilient organization that insurers are actually eager to cover. So I want to leave you with one final, very important thought to take back to your board. Is your financial firewall truly solid? Thanks so much for joining me for this explainer, and I will catch you in the next one.